Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning and welcome to I'm the Trader Capital live trading training. Ooh, live trading and training, I guess. All right, let's bow down and say a quick prayer. Don't like how that looks there. Let's move that clean. First and foremost, all glory to the Most High God, our Heavenly Father. We thank you for your grace and your mercy. We thank you for another opportunity to try again and to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray. Use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. All right. Amen to that. All glory to the Most High. Yes, yes, yes. As always, all right, before we jump into the chart, I just want to say this. There was a time I used to sit down in the charts with no real plan, jumping between strategies, second guessing every entry, and honestly just hoping the trade would work. And that's where most traders are, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge of money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, or 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the three pillars that every trader must have in their trading to survive and thrive in the financial markets so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. But before we dive deep into the three pillars, when you step into this arena, in this battlefield, you must first have two crucial realizations. One, trading is war. This is not a get rich quick scheme. Trading is the hardest thing that you'll ever do in your life. Two, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think success in the markets come from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on three core pillars. First one, most important one, money and mindset. This is the foundation of success. Second, we have risk management, the holy grail of trading. I've said it enough times in these streams, and I'll continue to say that. This is what will keep you in the game long after everybody else has quit. Then we have trading edge. This is where all traders start. I know this because this is where I started, and that's why in today's session we're going to hone in on your trading edge. Now, everything we do here is built around one thing, and that is confidence in your trading edge. And that confidence comes from three things. One, understanding how the market actually operates. Not what social media says, but how money truly moves. Two, having one trading model. One model with IPDA signatures that you trust and execute consistently. Three, having a plan and process. Because without a plan and process, you're just winging it and reacting to the price action. And this right here, this section that you're in today, this is where we focus on the third piece, the process part. I'm not here to force trades, I'm here to execute my plan step by step in real time. All right, let's get into the live trading floor. As you're watching, don't just look for entries, pay attention to the process behind the entries because this is what will get you into the 10% of traders who succeed. And if you want to go further to join the 10%, the 1%, all right, that's where we break all three pillars down inside the program. I used to think winning trades build confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, why you're doing it, how you're doing it, before, during, and after each and every trade. And that's what we build here. Let's get into our trading routine. All right. Weekly target going to this week is 3%. All right. Mental check-in, feeling generally okay, getting better for my sickness that I had going on. So feeling generally okay. Excited to see what price action has in store for us today. Excited to grow, all right, and get 1% better. Going into today, I don't think I will be taking any trades. It's pretty much going to be a live tape reading session, and maybe demo if I can switch the accounts. But really just going to be paying attention to price. It's Friday, it's the last day of the week. I've had an eventful week already. I just want to relax going into this Friday and not do too much. All right, so yeah. Acknowledge risks. I accept. I understand that trading comes with real risk. All right, and that losing is part of the battle. I think I messed that up, but we'll progress. News. It's Friday, April 10th. All right, we had CPI come out at 8:30. We have medium impact news coming out at 10, and later on in the afternoon at 2 p.m. So we have news today, making an optimal day to take a trade, even though we will not personally be taking trades. All right, nothing wrong with that. Our weekly program going to this week is a buy program. All right, let's go ahead and review price action overnight to see if anything has happened to change that for us. All right, for our weekly program to change, price would really need to come down and take Tuesday's low, right? Because Tuesday snatched Monday's low. We need to come down and take Tuesday's low, which is right here. Before we get into our three-step process for today, let's talk about yesterday's price action. Let me adjust my 20-day so then I can collapse this. We did come and take 20-day high, all right, and now my drawn liquidity is these relative equal highs here into previous month's high over here. Yeah. So let's see how price gravitates towards that. This is yesterday. We'll do a quick overview of yesterday. Yesterday, all right, we caught this beautiful continuation buy setup, and this was the outcome of it. You see the magic magnet doing his job. Magic magnet doing his job. This was our first draw on liquidity. All right, this was our second draw. We had this one. We had third draw, and we had previous daily high. Yeah, I believe this was previous daily. This was previous daily high. Yeah, as our terminus on the day, right? First draw was hit. PM session, we taped red this beautiful continuation setup right here. Let me get into the 1 minute because I remember it. If you don't believe me, head over to YouTube and you can watch it on the playlist Daily Journal, and you can watch me note the entry, the setup, how I would have managed it if I was in there. Same thing I do here, right here. We had a retracement setup, all right, that I was watching. Didn't give us -1, all right, but what it did is it gave us the green light go, right, to then enter the continuation buy, and lo and behold, time and price 2:30. All right, we dropped down into a key level. It was a lunch session low. All right, also, yeah, previous lunch session high as well, because a high can also be a discount array. But anyway, we had the low key level swing with displacement, market structure shift here. Due to the time, right, due to the time of the 30s, we want to see the high. This high has to take a low. Let me make sure it's obvious, because this is essentially the model in effect. So I wish I had a pen here. Anyway, let's use the highlighting tool. We got time, all right, we have time. We got about 5 minutes. Only need 3 minutes to get ready, really and truly. Where is the pen tool? Where do I find the pen tool? You know what, I'm gonna save the highlighter thing too as a favorite, so I don't have to do this. So key level right here, launch session sell side. This is the swing low. All right, this swing high here. This swing high here takes this low here, and it takes this low here, making it a breaker. All right, and that's the entry, this time right? At the 30s, we require a breaker entry, so this was a valid and viable swing high and market structure shift, all right, to get us into this trade, all right. Beautiful. Entry would have been on this candle, potentially on this one. As soon as it took it, I'm setting my limit, all right. And yeah, beautiful setup for PM session. And as you can see, did what it was supposed to do. We would be targeting dealing range buy side with the lunch high, and it did that exactly, -4. Yep, beautiful stuff, beautiful stuff. Let's get into today, and it's still going, really and truly. But anyway, we digress, and let's get into today because we have 4 minutes to go. But price action this week has been incredible. Especially coming off the week that we just came off last week. Oof, anything we get is gonna be incredible. But let's get into today. All right, first step one in our 3-step process is condition. All right, determine our session bias, and in order to do that, we must first identify our dealing range. And in order to do that, we go from 12 a.m. to current price action. We note the lowest low. I go from low to high. If you want to go from high to low, it just depends on how you set up your fib settings. We'll talk about the fib settings later in a bit. Maybe next week we'll start getting into that, but I'm still just getting my foot in. All right, and just like that, we've identified our dealing range. All right, and now we know key liquidity above and below dealing range. Above dealing range, clearly we have these over here. Have to squint because as far price action is far over here. All right, so we have these two bad boys up here, relative equal highs. I changed it already. I think I changed it by side. Yep, made it a little bit thicker and changed the color. Below dealing range, we have lunch session sell side. And AM session sell side below that. And we have previous daily low right here below that. And just like that, we're ready. And now we wait for one side of the dealing range to get taken, which will give us our session bias, and then we'll anticipate our 2 types of trades that we have, which is retracement is the first trade that always occurs. All right, we always want to see the retracement first, and then continuation. We always assume that market wants to continue in the direction of the side that it just took. All right, we always make that assumption, but we're also aware that obviously it can retrace to then reverse, all right, and take the other side of the dealing range. Simple things, different day, same process. All right, different day, same process. We don't complicate it. We make it as simple as it can be. I want to see the whole. Okay, cool. Dealing range high, dealing range low. Now we're ready for kickoff. Ring ding 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 ring ding 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 da ding 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 da. That's annoying. I remember that advert though. I think it was Hello Moto. I think it was that, isn't it? Anyway, opening bell, kicking off. Open range gap is below price, so we gapped up. So we have a premium gap up. And we're waiting for one side of dealing range to get liquidated to give us our condition going into the session. We don't do anything until we have a condition. step by step. If you don't have step one, how you gonna move to step two? If you don't have step two, how you gonna move to step three? If you don't have step one, you don't know what kind of trade you're taking, right? You don't know step two. You don't know if you're getting into a retracement setup or a continuation setup, right? So step by step, and you have to have each step to move on to the next step. Like I said, today is going to be a tape reading session just because of current market climate. I really don't want to be trading too much anyway. I'm fine with how I'm ending the week. I believe one account is down 857 and the other account is up 587, something of that nature. We can confirm and deny. Yeah, this one's 8 457 857, quick math. And this one is up 587. And I think that's enough for me for this week, right? So I'm fine with just having a nice tape reading session to end the weekend. More opportunities next week, every day, every week, and it won't stop. I don't need to pass these right now and today, all right? I know that's gonna happen anyway, so I'm just gonna take my time. Excuse me, and enjoy the journey, enjoy the markets. We're gonna have fun today. It's Friday. Fridays we only trade morning AM session. All right, we're done. For the rest of the day, we don't really come. I don't really trade PM session on Fridays. So I'm thinking about how we're gonna have Fridays at the Trader Capital, right? When it's an actual building institution. It's gonna be fun Fridays. Looking like we're heading to dealing range buy side. Market is drawing to previous month's high, right, which is above price. Which is in close proximity to this standard deviation here. Cool. Why are you hiding over there? All right, taking dealing range buy side. Our condition has been established. We are in a buy program for the session, which is in line with our weekly program. Okay. For a retracement setup here, I will need to see this swing low get taken for my market structure shift. And this swing low, all right, takes this high here, also takes this high here, and takes this high, takes this high. All right, so we have a swing low that takes high, making it a breaker. Okay, makes it a valid market structure shift for this time. All right, for this 9:30. Yeah, I think today's gonna be more of like, let's dig deep into the model and explain certain stuff, right? So so when I say swing, right? This candle, this is a swing low. All right, it has a candle with a, is it a lower high or high? You see, I always confuse myself when it comes to that. I always confuse myself. So hold on, let me not give you false information, right? Let me not lead you astray. So let me get the proper information, because I always confuse myself for that, I swear. Bear with me. Bear with me. We're gonna get into some stuff today. Hold on. Where would that be on? Which one is phase 4? Plan, model, process. I have 2 of those though. Trading edge. Bear with me. Bear with me. It's been so long, man. Cool, it's not that. Okay, so it's higher low. All right. So a swing low, right? Like this one right here. These 3 candlesticks, right? This candle here, this candle here, and this candle here. It takes 3 candles, all right, to form a swing. All right, it takes 3 candles to form a swing. A swing low, right, is a candle that has a candle with a higher high to the left and a candle with a higher low, sorry, see? Higher low, no higher high. A candle with a higher low to the left and a higher low to the right, all right? As you can see, this candle's wick down here, is above this candle's wick. This middle candle that makes the swing low, all right? It has one candle to the left of it that has a higher low and a candle to the right of it that has a higher low, all right? Just like this candle right here is forming a swing low, right? The middle candle is the swing low. It has a candle with a higher low to the left and another candle with a higher low to the right of it, making this a swing low. Now, if you were to trade back above 2 and through dealing range high, this will be the swing low that I'll be interested in seeing a market structure shift happening, because actually it has to take this high as well for me to be interested at this time. But anyway, this is what will be a swing low, right? We also have a swing low here, this candle right here. It has a candle with a higher low to the left and a candle with a higher low to the right, all right, making this a swing low. Same with the swing high, right? This is a swing high here. This third candle making a swing high has a candle with a lower high to the left and another candle with a lower high to the right. This is still the swing low that needs to go for me to be interested here, because this swing low doesn't trade back to and through the key external liquidity for me, all right? So it's not a valid market structure shift for me. Swing high, right? This is also a swing high. This candle here, it takes 3 candles to make a swing. It takes 3 candles. This will be the high of the swing high, okay? This candle here has a candle with a lower high to the left and a candle with another lower high to the right, making this a swing high. Swing, swing, swing. Still waiting. This is still the low that needs to go for me to be interested here in the retracement setup, all right? Do we understand swing highs and swing lows? When I say a swing, that's what I mean, okay? Yeah, I know there's a language barrier, so I'm going to do my best now moving forward to, we've got a market structure shift here, all right? So I would be interested in a retracement setup. Let's see if he would have given us any contracts. Oh, 1 contract, all right? 1 contract, that's fair. So we're currently watching this retracement setup here. I'm not sure if I would have been tagged in it yet, but once it trades back to and through this market structure shift, it should be tagging us in. Let's see. we'll assume for now that we haven't been tagged in the trade yet, okay? Because this range has some full candles, we're going to use the candles as our exiting points. We're going to use the candle bodies, candle bodies. But swing high, swing low, swing, it takes 3 candles, right, to form a swing. And a swing low, well, let's do swing high, right, is a candle that has a lower high to the left and a lower high to the right. And a swing low is a candle that has, yeah, I always get confused, bro. A higher low to the left and a higher low to the right. So when I say swing, you guys should be understanding what I mean when I say swing now. I'm trying to reduce the bridge, be the bridge between the language barrier. Because the first stream, my brother did make a good point that I'm saying words and people don't know the words. They don't know this language, and this language is all I know. So it's a language barrier thing, it's a language barrier thing. But slowly and surely, right, we'll get there. Nothing in here that I would be interested in a continuation on, okay? I'm not seeing any internal liquidities in here. Any fresh ones anyway. I only like fresh internal liquidities. Oh, wait, that's midnight open. 20-day, yeah, it didn't. I would take 20-day high if it came to it. Where is my previous day is 20-day high. Okay, cool. This one probably would have, if we set the limit as soon as it took that, it would have probably entered us in somewhere over here. So 1 contract, right, meaning we'll be taking this to -1. It's a big ass stop, but either way, it's 250 we're losing. So risk is always the same. This right here was a model that I was testing. I was actually collecting data on before. First presented fair value gap with a market structure shift. This swing low right here. So I'm paying attention to that. Nothing wrong with having multiple models in your arsenal that you can, pull out when the market isn't, doing what it's supposed to. 9:50 macro will be upon us in about less than 2 minutes. All right, back to distraction free zone. I'm so sorry. This is not the place for that. Professional. Come on, man. This is the first week test run, right? We'll get more professional as the weeks, go by. This is me just getting my foot wet into this live streaming thing, okay? Dipping my toe in there a little bit, and then we'll be jumping in. Tagged in or not tagged in, we still would be in this trade, right? Still would be in this model that I'm watching here. $9.50 macro. What you got for us today? Secondary entry here, potentially. Watching this here. Struggling to make it to constant encroachment. The open range gap. Now, what I'm paying attention to, if we were tagged in this trade, right? The characteristics that will tell me if I'm offside. That's what I'm paying attention to right now. So far, we are respecting the first presented fair value gap. This order block up here would be my last line in the sand. Closure above mean threshold. That would be a reduce the risk or close the trade. But in this case, we only have one contract, so we wouldn't be reducing the risk, nor would we be closing the trade, and this will be waiting for it to stop us out. If we had two contracts, I'll take one off. If, right, we get a body closure in the main threshold of that order block. If a body closes in the main threshold here, I'm watching this here. If we use this to close above first presented fair value gap here, I'm watching how price behaves in here. For the current trade, if we were tagged in or not tagged in, I would want to see price disrespect this inefficiency and show no respect for it at all. This here. Bodies are closing above it, didn't completely fill it in and left a portion of it open. Signs of strength would not be what I want to see if we were tagged in this trade, right? If we were in this trade, in this sell. Like I said, I'm watching to see if it's going to lead to a closure above first presented fair value gap. But for this sell, whether we were tagged in or not, this is my last line in the sand. Body closure and main threshold of this order block. Liked how that this candle closed after hitting the lower portion of first presented fair value gap. Now I want to see price disrespect this inefficiency here, but with the body closure below it, potentially use it as an inversion to continue lower. That's what I want to see. Alright, so let's see what the price action gives us. Seeing how it gravitates towards constant encroachment of open range gap, alright, and potentially to a full gap fill and to -1. So let's see. Okay, I like that we closed below that. inefficiency, disrespected it. Now if price comes, I want to see price stay in the lower portion of it. If it comes back inside of it, I'm channeling my inner ICT right now. Oh, mate. You say, I want to see large, stretch, blacked out limousines to the downside. That's my guy. Okay, when he says he wants to see speed. 10 o'clock, all right, so we have our internal liquidity established. Open range, sell side and buy side. Smashing through opening range, sell side right now, and potentially tagging us in the trade if we already wasn't tagged in the trade. All right, but we just make an assumption that we were tagged in the trade, all right? So now that we've seen a retracement setup, right, gives us the green light for continuation setup, and we're at internal liquidity. We're taking internal liquidity right now. The swing high, we know what swings are now. The swing high that will need to go, right, will be this swing high right here. For a bullish market structure shift. This swing high, because it's really the first swing high I see looking back after internal liquidity was taken. This is the first swing high I see in the price. And because it's a macro time, all right, it doesn't need to be a breaker swing high, even though it takes this low and takes this low as well. It doesn't need to be a breaker, but it is, right? We also dropped into equilibrium of the dealing range, which is the midpoint. All right, it's a yellow line. It's a midpoint, the one that's very hard to see, the one that I need to change the color for. Maybe it's just my glasses making. It's really hard. It's hard to see regardless. Watching this inefficiency, I want to see keep price lower into consequent encroachment of open range gap and full gap fill, and to eventually, to -1. We also have 20-day high, right, below in discount, right? So this is a discount array that we could potentially also frame a continuation setup on. Just because it's a high, right, doesn't mean you can't. It's not a discount array. That's one thing that I've actually really been working on, just switching off highs and lows as, whatever. They're all premium and discount arrays, regardless of whether it's a high or it's a low. It's a liquidity. If it's gonna go to consequent encroachment, I need to see it start heading there now. We also have a swing high here. This is the next swing high, because this swing high trades back to and through the key level. Doesn't need to be a breaker, all right, because we're in the macro time frame. It's a swing high because we have a candle. Because we have a candle with a lower high to the left, right, and a candle with the lower high to the right. Between these three candles, this is the highest point, okay, making this a swing high. So it's lower high, higher low. Lower high, higher low. I'll try to remember it. But I wouldn't hold my breath on that. It's expected to see consolidation around equilibrium. All right, that's where you get the most consolidation around equilibrium. The middle of the range, dealing range. All right, consequent encroachment. There we go. Oh, I forgot my little handy dandy magic magnet. Since we took dealing range buy side, I will be anticipating a draw into these relative equal highs. The only thing that will change that for me is if we go and we take dealing range sell side, that will flip my bias, and magnet will be taken to the downside. And now, this is the swing high I would need to see to be interested. Still have a good 2 minutes in this macro to execute. So let's move this to the side here. We're still watching that. It hasn't done anything for us right now. From there to here, bread and butter, you know. Excuse me, sorry. Still coming off the sickness, you know. So don't be mean to me. I would be interested here in a continuation buy if it takes this market structure shift on this swing high. So let's get ready. Hasn't given it to us yet, all right? Just being proactive. That's 225, 27. I'm trying to see the low, see if we went through it. Oh, it's the same. It didn't go 2 and 3. It went to it, but not through it. I want to see you go to it and through it. 273, 25. Yeah, it's the same. the grid that he been talking about. I see it. I see it. All right, there'll be nothing for us to do once this candle closes. Yep, nothing for me to do here. Just about watching it now. Watching how price gravitates towards a full gap fill into -1, and I'll sell trade here. Still anticipating the continuation, but if it was to form now, it won't be anything that I would be personally engaging in, just because we're outside our trading times. Next opportunity will come at 10:30 for us here, after first hour of trading. But we are watching this sell right here, this retracement sell. I'm happy with my read on the price action right now. I'm seeing a lot of things that is just opening my eyes. This will still be the swing high I will need to see get taken for a continuation setup. Not one that we'll be engaging in, alright, but this is still the swing high I need to see. We know that our draw is up here until we take dealing range sell side, so we don't really need to see the magic magnet right now. Looking like we're about to take this high. We can still tape read it, even though we are collecting data on setups that start in the macro and finish outside of the macro. Yesterday we would have took a loss if we were in that trade, but the past 2 days would have been winners. So let's see how, if this confirms, what it will do, right? More data to be collected. All right, we'd be interested in that. We're setting our limit, targeting the new high, and obviously going towards our drawn liquidity. So let's see if it is gonna tag us in here. Okay, so we also have this high it takes here. So entry will be in this high, the highest high, giving us 3 contracts. And we would be getting tagged in that right there. When it came back down, we would be getting tagged in that. So we're gonna use the wicks on this one because the candles, it's not really that much of a range in terms of using the candles. So I'm gonna go with the wicks on this one. If he wasn't tagged in there, he's definitely tagged in this candle here. Three contracts. We'll take one off at -1, -1.5, and terminus at -2. So let's see how that plays out. This will be a trade that right now, at my current understanding of price action, I would not be engaging in, but we are collecting data on these trades that start within the macro and finish post macro. Okay, I'm collecting data on those. So right now we have 2 that panned out, 1 that didn't. All right, and now this is our 4th one for the week that we are collecting data on. So let's see how this one plays out. If we get back above this, I want to see it, use it as a reclaimed. I'm not sure if the terminology is right. Reclaimed bullish fair value gap. Yeah. Don't quote me on that. I'm not sure if that's the proper term. If you want to learn that real language, go to ICT's YouTube channel. Do not quote me on it. Don't do it, because I ain't sure. So for some retrace, oh, actually, now this is something that I have been noticing this week. All right, for the retracement setups, right? I need to see for my entry, right, to the next point of interest for the continuation, if it gives enough room. Actually, if -1 is enough to even enter the trade. Right here, when this retracement setup confirmed, our next point of continuation, right, would be 20-day high and previous day's high is what would be using as a discount array to then anticipate the continuation. From entry here to the next point of interest, there's not much, right? It doesn't even get you to negative 0.5. So that's something that I'm paying attention to, right? That if I see, hey, I'm getting a retracement set up, but my next point of interest for my continuation is right next to my entry, does it make sense to enter this retracement setup? Right? I'm collecting data on those. All right, I haven't made a definite decision yet. All right, because we always aware that it can turn retracement to reversal, right? So that's just something I'm collecting data on personally, that I've noticed this week, that I really want to gather the data on. And obviously experience and data will tell me, hey, this has happened this many times, right? It's not worth the trade. Just let the retracement go and anticipate the continuation. It ends up turning into a reversal. That's a trade that we're just gonna have to be okay not having been in. Okay, you don't have to be in every move in the market. It's okay to sit still and just watch certain moves go without you. Like right now, I'm watching certain moves goes without me right now because it's a decision I made to just tape read. And I have no qualms, no queries about it. All right, I love tape reading. I think. Good morning, good morning. Tape reading. When I have a tape reading session, those be my best sessions. I'm super like, not that every other session isn't the same. I just feel more, you know, elated and more relaxed and more calm in my tape reading, and it gets me closer to the price action, right? It gets me closer to the candlesticks and how they move, the breadth of the market. Yeah, I enjoy tape reading for sure. So we're watching this continuation buy here. We're targeting dealing range high, or the new high created above dealing range high, and it's essentially to our drawn liquidity, which is these two relatively equal highs above here. I want to see a closure above this inefficiency and for it to be reclaimed and continue higher. All right, we go closure above it. Right now, I want to see price stay in the upper portion of this inefficiency here. These are all signs, all right, and signatures that I'm on side in my trade. That's my next phase of progression, is what I'm paying attention to. Once I enter a trade, Yeah, it's out of my hands, right? But I can still pay attention to the candlesticks and the storyline that they're giving me. Let's take this here so it's not impeding in our price action. We have this inefficiency down in here that I want to see support price higher if price was to come down here. But let's see how this candle closes, because the wicks are allowed to do the damages. It's the bodies that tell the story. The wicks are allowed to do the damages. It's the bodies that tell the story. I've been holding the jade in my hand this whole time. Oh my goodness. I've been clinching and with the jade in my hand this whole time. It's up to 6 years of holding the jade in my hand. Just old man, when are you gonna shut up, old man? Oh mate. If you don't know, you don't know. If you're ICT, pure ICT student, you know what I'm talking about. Oh, the reason why I would enter on this market structure shift on this swing high and not the one below is because, from once again, for my data collecting and my back testing and walking it forward, right? I've noticed that if price is animated, right, the displacement leg takes multiple structures as it goes in that one candle, because this one candle took this high, and took this high, right? I'm gonna elect to go with the highest swing point that that candle takes, right? That causes the market structure shift. Because I've noticed that sometimes when it does this signature right here, this one candle takes multiple structures, right? Multiple market structure shift. It typically doesn't come back down to the lowest market structure shift, right? It will go with the highest point, or maybe the second point if there's three, like it did right here. It came to the highest point. That's why I was like, you know what? I'm seeing this. Let me adjust my entry to up here, because I've seen this enough times to understand that it might not come all the way down to my preferred entry, which would be the lower one, which is better for me, is better for risk, right? But I sacrifice the risk, right, to be able to get into the trade, right, to be in the move. I don't mind. It went from 3 contracts to 4. I lost 1 contract in this trade to then give me the opportunity to capitalize on my hard work of being able to identify my model, right? So that's why I went with this swing entry, with this swing high, instead of the initial swing high up here that I had. As you can see, bodies, right, respected the upper portion of this inefficiency, this reclaimed bullish fair value gap, right, as I wanted to see. So these are all signatures that this trade is on side, all right, and I can at least anticipate it getting to my -1 target, depending on how it behaves here, right, in this first presented fair value gap, right. This is going to give it a little bit of a pause, right. It might need to drop lower depending on how it behaves in this first presented fair value gap. I like that. Yep, -1 would be getting hit for me because for me it would be 50 to 5, 50 to 5, yep, 50 to 5 right here. But we'll wait for plausible deniability regardless, all right? But for me, all right, -1 would be getting smashed there, and we'll be taking one contract off. There you go, plausible deniability. If it didn't take you out here, most definitely would have took you out on the next candle there at 50.25. Yep. And now I want to see price the same way it used this inefficiency is the same way I want to see it use the first presented fair value gap, all right, to target opening range buy side up here. So we've got -1 on that continuation setup. Continuation setups this week have been, whoo, chef's kiss, really and truly. Chef's kiss. I'm really feeling the market today, boy. What? Stop playing with me. I'm like in tune with that shit. I mean, I'm like here. Like I said, this is gonna take a little pause here. It's gonna take a little pause here. All right. Either way, it's giving us -1. Now, our stop for this trade, right, will be at 7.75, which is right here. So we would have taken something off, one contract off, and stop would be reduced to 0.75, all right, because we're using the wicks. Got less than 2 minutes until 10:30, until the first hour of trading is behind us. We can go ahead and delete this, but you still would be in this retracement cell here, all right? You still would be in there. Just want to keep it clean and not have too much going on, because my chart's already a little bit busy. So anything I can take off to keep it clean, I'd rather do that. We're still showing respect for this reclaimed bullish fair value gap here. We're still on course. We're still on course. Nothing's changed. This order block here would be the last land in the sand for this trade, right? Closure in the mean threshold would give us our warning bells to either reduce risk, sorry, or close trade. But obviously, for me personally, I'll reduce risk and I won't be closing the trade if I have multiple contracts. Definitely getting plausible deniability. If you know you still had doubt the -1 wasn't hit, it's giving it back to you. Now, I'm intrigued to see how price behaves in this, because this is the last line in the sand for that retracement setup here. So I want to see price close above mean threshold of it. 10:30, first hour of trading is behind us. So this trade, like I said, I personally right now with my current understanding of price action, I will not be engaging in it. But we're still collecting data on these types of trades that start in the macro and complete outside of the macro, right? Due to the current market condition, they've been really doing what they're supposed to do. So I'm collecting data, and if it makes sense for me to take those trades, I'm gonna take those trades. I only let the data, right, allow me to make a decision, right? So I'm not just seeing them and looking at them and be like, oh yeah, they look good. Let me jump in them. I need to collect the data, and I need to have the data back it up before I pull the trigger. It's all data collecting, right? It's all data collecting. You have to love collecting data. You have to love data collecting, because that's all this is. All right, like I said, I want to see price a closure above. I mean, oh, you would be getting smashed out of it anyway. You'd be getting smashed out of it anyway, right? So, yeah, that retracement setup would have been an L, all right, which comes into play into what I've been paying attention to in terms of where the point of interest is for the continuation setup. If it doesn't offer me a point where -1 at least gets hit, those trades, I'm just gonna have to let them go without me and feel no type of way. So we're collecting data on those, right? But for now, that's where I'm leaning towards. Anyway, we're taking this 15-minute candle high, so we need to adjust our dealing range to this high, okay? And -1.5 on this trade has been hit, so a contract will be coming off. All right, we'll have one more contract remaining to get us to -2, which will be terminus on this trade, because this trade allowed us 3 contracts, all right, and we partialed one off at -1, another one off at -1.5, and terminus in the trade would be at -2. Stop still remains at 0.75. We can get rid of this here right now. Solid stuff this morning. I'm excited, right, at my read on the price action today. I'm really seeing it. I'm seeing a positive. Yeah, I've been clinching it for so long. Anyway, since we're taking dealing range buy side yet again, right? We anticipate a retracement to then continue. Doesn't always have to give it to us, but this will be the market structure, the swing low, all right, that we need to see go to be interested in a retracement sell. All right, this swing low, all right, takes this high right here, takes this swing high. This swing low takes this swing high here when this candle traded to and through it there, all right, making this a breaker, making this a valid swing low and market structure shift for this time, right, of the 10:30, for this time, the 30s. All right, so this will be the next valid swing low to cause a market structure shift for me to be interested in a retracement sell back inside the range. It's sense being made. It's sense being made. I'm watching this inefficiency here and how price behaves in it. Where I want to see it keep price higher. I want to see price stay in the upper portion of it, which it is doing. All right. to my draw on liquidity, which is these two relative equal highs up here. The magic magnet is trying to do its job and pull price action to where it's at. Let's see if it succeeds today. Oh, now let's see if I remember the information. Swing high, right? Is a lower high to the right and a lower high to the left. Swing low, a higher low to the right and a higher low to the left. Yeah, let me confirm I'm correct. Yep, higher low, higher, lower high. I'll get it. I know what it is, right? If I see on a chart, I know exactly what it is, but like to explain it, sometimes it's difficult. But I need to know how to explain it, right? I'm gonna teach traders. Staying in the upper portion of first presented fair value gap there, like that. Wicks are allowed to do the damages, but the bodies will tell you the storyline. It's the magic magnet. It's doing its job. I put the magnet in price like, okay, we see that magnet, we like that magnet. It just draws price towards it. That's the secret here, magic magnet. maybe we can answer one question while we let price do his thing here. We've already got two partials in this trade. We've got one contract left, and we're waiting for -2. We reduce risk. So we can let the price do its thing as long as we're staying above the upper portion, alright? I'm fine here with how the price is going. I'm content. I'm also content with as much as I've caught this price action here. That's enough for me. I don't want to do anymore. I don't want to do anymore. Too much power. We'll do one question today. I'm not afraid anymore. Alright, alright, alright. Question says, do you teach this? I'm teaching it right now. I'm teaching it right now. Yes, I do teach this. I'm working on the material. One thing that I am working on myself is my explanation, right? Understanding that newbies don't know this language, and there is a language barrier when they do come here. So for me, it's about making it as simple as possible, all right? First in my head, and then being able to translate that to other people. Because I tend to, because this is all I know, right? This language is all I know, so I tend to overcomplicate it sometimes in my explanation. All right, so market structure shift here. I would be interested in a retracement here. So let's watch it and see. Just came down into this inefficiency here. So let's see how it behaves. Still would be in this trade, by the way, because our stop would be adjusted down here. So yes, I do teach this, and my goal here, right now, is to teach it, right? This is how I'm going to be teaching the traders or analysts that I'm the trader capital. So this is just me getting my foot in the door, right? Trying to become a better teacher, mentor, as you would say. All right, so yes, I teach this. Do you have a course? Not right now. I don't have a course. I'm still putting the material together. All right. Do you offer mentorship? Yes, I will be offering mentorship. I will have a course in the future. Once I have my material together, mentorship. Yes, 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 yes. If you want to join now, you can. It's open, right? But the course wise, I have a rough draft of my material. I'm still trying to put together the material so it's cohesive and it makes sense. All right, I'm going through it with my current test tubies, and there's a lot of confusion in the wording and certain things. All right, that I'm trying to fix. So it's straightforward. It's not confusing, because one part confuses the next part. Right? If one student is confused, that gives me the knowing, saying that, oh yeah, maybe she's not going to be the only one that's confused here. A lot more people will probably be confused, so I need to adjust certain things. But I'm putting together the material. So yes, right now, no, I don't have a course. Yes, I do offer mentorship, and you can join the mentorship right now, even with my current material. Yes. I'll first need to know where you are in your trading, how long you've been trading, if you have been trading, what you're looking for in trading, what are your goals, your outcomes, your current procedures and protocols that you're doing, and your understanding of the market. I need to know where you're at, what level you're at, and that would depend on how I can help you, better assist you where you're at. What's included in your program? Well, once it gets active and live, what would be included would be access to me, one-on-one access to me, right? Access to DJ, right? You come on DJ PM sessions if you can make it or not make it, right? You'll have access to that where you get one-on-one, not one-on-one section. It's a group, really a group coaching, but you get to ask questions. You'll get the course once the course is live and active. Once I get the material together, right? And you get a community, right? You get a community of like-minded traders that are on the same path. We're not about luxury life in trading, right? Because that's not me. My goal here is to use trading, right, to build passive income. Use the money, build passive income. So money's coming in, and I'm not having to work to do it, right? That's where the money and mindset aspect comes into play, right? We're here, we're playing in the pool of money where money's played, where the money game is played, and the goal here is to extract as much money as we can, right? Put it into assets, right? Income generating assets, or into limited partnerships that will create passive income. So money's coming in without us having to trade, or even having to work or lift a finger, right? That's the end goal for me, and that's how I want my community, the people around me, thinking, right? I don't want people around me that are thinking, hey, I'm here to trade so I can go buy a luxury car and live this lux lifestyle. That's not what I'm about, and that's not the people I really want to surround myself with. So yeah, if you're that kind of person, just, you can be in a group, but just, keep that to yourself. We don't want to see it. We don't want no parts of it. Our goal is to get our money, working for us as hard as we've worked to attain that money. All right, so that's what it's going to be about. So that's what you'll get access to. The course, mentorship, and also bonus, right? For those that prove themselves, right, that they can learn, right? They can prove that they can follow the system, procedures, and protocols on a daily, consistent basis, right? We offer you the opportunity, all right, to come manage funds, right, for us here at I'm the Trader Capital, right? So you'll become an analyst for us, right? For those that prove themselves, you become an analyst for us, and we'll give you access to capital for you to then trade. You become a fund manager, really and truly. That's my goal. Build fund managers, right? That will either work with me and my fund, my hedge fund, or they might want to, scale themselves and open their own hedge fund. Either way, I want to help you get there. Whoever your goal is, I want to help you get there, pretty much. But yeah, that's future thinking, right? Forward thinking. I'm always focused on where I'm going, right? I always know where I'm going. I'm focused on where I'm going, so I don't get distracted with the things that the world, distracts you with. There's so many things that will distract you in these days. So many things. All right, for this retracement sell, right? I like how price is respecting this inefficiency nested inside of first presented fair value gap. All right, should we get a closure above it and in above this mean threshold of this candlestick right here, this up close candlestick, all right, that will be alarm bells for this retracement sell. But you still would be in this continuation buy, right? After two partials, it allowed you to reduce risk. Still in there. Still in there like swimwear. 10:50 macro, about to kick off. Oh, we were in execution time. Well, still, there wasn't much really happening here. We're already watching this trade. Target wise, there's enough bodies in this range for me to use it. However, I don't like the fact that my entries right here and my first partials right here. So for this, I'll go wick. I'd go wicks. But wick to wick is a bit steep though. Yeah, see, this is what I mean. This is the one aspect of my trading that is just just annoys me, because I don't have it together there. I have a foundation of it. I have a foundation, of what I'm using right now, but there's still pieces of the puzzles missing for me, and that's in my trade management. My trade management. Oh, yeah. Something needs to give. Something needs to give. Something needs to give. There, something needs to give. I need to figure out something there. Well, we'll watch it with either one, right? We'll watch it with either one. Let's collect the data. That's what we can do. Just collect data and let the data tell you what you need to do, right? Don't stress it. Don't stress it. Don't worry. Be happy. But yeah, you'll get elite coaching and mentorship. You get our online program once it's active, once I get the material together. And you'll get access to private workshops and fund development track, right? Like we just talked about, right? My goal here is to build fund managers, right? So I'm putting you on a track for those that prove themselves, all right? You'll be on a fund management track, right? To either become a fund manager at Trader Capital or to start your own hedge fund. That's how we scale this bad boy. However, I can help you. I'm here to help. I'm on a mission to impact 1 million people through trading by 2030. All right? I take that mission very serious. Right now, I'm only 0.1% of that mission, and I need to do more, right? I need to do more. Like I said, body closure, mean threshold here will be alarm bells for this retracement sell. So far, we haven't got that yet, so no need to panic in that. No need to fear, no need to panic. Yeah, so looking at this retracement sell, yeah, I'm still trying to figure out how I'll be managing it. Whether it'll be, yeah, entry here, first partial here. To me, that doesn't make any sense to me. this could be 250. I'm just trying to see something here. Two contracts. I would never do that. You and me only. I did it all for you. Still you are lonely. It's Friday. It's Friday in the markets, you know. Anything is possible. In a market that's been going higher and higher. Alright, we got room for one more question. Not much going on here. Let's do one more. Is this good for beginners? What, the course, the program? Yes. It's perfect for beginners, right? I would much rather prefer people with no experience, right? Because they're not coming in with a clouded judgment of what they already think they know about the markets, right? And we can lay the proper groundwork, the proper foundation, all right, for you. All right, so it's actually better if you're a beginner, right? I actually prefer people with no experience because experienced folks, they think, they come in with what they know, they think they know what they know, and it's tough to dismantle what they think they already know about the markets. All right, but for newbies, it's fresh. We'll get the proper groundwork going. You start off with the process, procedure, and protocols, and yeah, it's perfect for beginners. My ideal people I want to help is beginners. But I don't mind helping traders, right? If they're willing and open to let go of what they already know, right? Then I don't mind helping experienced traders, all right? At least helping them refine their risk management and procedure and protocols so they can scale if they want to scale, right? But I wish I had the information I have now when I started, right? So it's perfect for beginners. So we've got a body closure above mean threshold of this order block here. All right, that's a warning sign already in this trade. So I would be reducing risk in this retracement sell that we're watching. It didn't quite give us a continuation setup that I would personally engage in, right? But I'm sure somebody could find something in here. I'm watching this model right here using the first percentile fair value gap with the market structure shift back above it. I'm watching that. I like the respect of this inefficiency in here. Let's see how it plays out. So this retracement sell, right, we would be reducing risk and would be understanding that, hey, potentially we could be offside here, and we'll be accepting the risk at this point once we got that closure. Still would be in this buy here, all right, this continuation buy. Still would be in here. Still targeting -2. Let's go ahead and delete this so we have less on the chart. But we understand price coming here will take us out. We already know we would be reducing risk on this trade and potentially coming to grips with the fact that we could potentially be offside. Do you use indicators or price action? Do you use indicators or price action? I mainly use price action, right? But I do have indicators. I do have indicators that plot my time, right? Plot the price for me, which is session highs and lows, daily highs and lows, weekly highs and lows, monthly highs and lows. Um, I also have indicators that plot opening range gaps, opening prices, right? It's just I have indicators that point out where the price points that I'm interested in, right? The levels that I'm interested in, and I have indicators that shows my time, right? My time, because time and I trade a time and price theory, right? So that's what my indicators point out to me: time and price, because it's something that I don't want to manually do myself. So I rather have an indicator that does it for me. All right, so I'm not having to draw out all the lines and having to do that manually, right? So, but that's pretty much it. It just plots out my time and my price, and pretty much candlesticks. Pure price action trading. No indicators. These are the only indicators I have on here. I turned off the new NWOGs, new week opening gas, just because it just makes my chart look a bit too messy. But I pay attention to them on a separate time chart. But we have I'm the trader time indicator. We have the trader price. I couldn't combine these two, so I had to make two different indicators for my price. All right, so they just draw my price points and my time and price, pretty much the only indicators I use. Other than that, pure price action, time and price theory, time and price, baby. That's a good question to end on there. That's a good question. Yeah, I have indicators, but I don't trade indicators, right? I just have indicators to make my job easier, right? Because I'm not saying I'm lazy, but like I would rather not have to draw out all the lines and stuff myself, right? I rather it be generated for me. Some people want to draw it out, like my mentor. He likes to draw it out himself, and just because that's what he's used to. But for me, I don't know. He said high it's a present touch or a high touch or something. Yeah, I like the high touch, Michael. I would just prefer it to be done for me, right? But I always verify that the indicators are plotting the correct data points, because that is an issue, right? That could always be an issue. The indicator is not plotting the right data points, gives you the wrong price, gives you the wrong data, and you're all messed up. But pure price action, baby, pure price action. No indicators around here. Just time and price indicators, really and truly. Actually, what does the two have? I'm probably maybe. Oh, okay, the daily, weekly, monthly. All right. Okay, and it has the opening range gaps. Yeah. No, first present a fair value gap. Yeah, an opening range gap. Yeah. Okay, and we got 20-day ranges on there. Okay, that's fair. That's fine. And we got a session. Opening range gap is on here. Opening price. And we have the opening ranges: midnight opening range, 9:30 opening range, AM session. 9:30 is AM session opening range, and PM session opening range. And then we have our time, which plots the vertical lines for us for the week, for the days, for the session, for our macros, for our trading times, and all of that stuff. gives us our week. The week at the bottom there, Thursday and stuff. Yeah, so those are the only indicators I use, but pure price action trading here. Watching this right here, take price higher to potentially -2 and potentially to a draw on liquidity. We would have reduced risk here, but obviously you still would be in this retracement sell, right? And we're still in this continuation buy. Targeting, we got one more contract, targeting -2. Just time and price. I'm watching this as a potential continuation, right? Using first presented fair value gap. Nothing that I would personally engage in right now, but just data collecting. Just collecting the data, building my models arsenal, you know. This has been a good Friday. This has been a good Friday of price action, boy. I'm feeling this. $10.50 macro coming to an end on this candle. Yep. And that's the indicator doing his job, right? I don't have to draw that out myself. High touch. I prefer it. See ya. Thank you for tuning in. Thank you for tuning in. I hope you got some value out of today. I hope you got some value out of today. It's been a solid day. $11.11. All right, we'll be wrapping up here in a bit. It's Friday. This is our only session. We're gonna go a little bit longer. Let's see how I feel. If the price action starts moving, then we'll stay. But if it starts meandering, but now let's get that -2. Let's see how long. We'll stay to about 11:30 latest. Right, we'll stay to about 11:30 latest. Since it's our last session of the week. Consider turning down what? What was that you just gave me there? What do you mean to consider turning down? It's -2 on the cards today. It's never -2 on the cards today for us. Our terminus on this continuation buy. Beautiful stuff. I would say, like I keep saying, continuation this week. It just from before, right? It just was retracement setups were like hitting nice. But this week has been really for continuation. And this week price action has been chef's kiss. Keep it like this. Alright, Apr, keep it like this. I like this. For me anyway. For me. I don't know about everybody else and what you guys are going through out there, but for me, I like this price action. Because I'm seeing my model in it, right? My model is performing in it. Let's put an alert. So let's put an alert. 150. Just so there's no doubt, no plausible deniability when it gets smashed. Just just a twist the knife just a little bit, just a wee bit. Once we take this high right here, this swing high on the 15-minute, once price trades to and through this candlestick's high, we will be adjusting daily range to this high. All right, right now that's our target, our drawn liquidity, because that's the highest point after we took daily range high buy side. So right there, right now, is grounds to adjust daily range. Wrong thing. To this current high. And itching close, and you would begin taking out of this retracement setup, which we already understood from over here, from when this candle body closed above mean threshold of this order block here. Really understood that we were going to get taken out, so I would have reduced risk, right? I wouldn't have closed it completely because I'm still not there yet. I would have just reduced risk on that trade and let the rest come and take me out for what it wanted to take me out for. And we'll still would be in this continuation buy here that we're watching, all right? In a normal world, right, this is a trade I would, if I was trading today, this would still be a trade that I would not engage in just because it completed outside of the macro. But like I said and been saying, we are this week we've been collecting data on trades that start in the macro and complete outside of the macro, and so far we're getting good data back. That not enough data to obviously jump ship and be like, yes, we're gonna start taking those trades, but I'm seeing in good data back from what I'm seeing so far. Out of 3 trades, no, it's not three, one, two, out of 4 trades now, right? 3 were winners and 1 was losers, and I'm fine with those odds. I'm happy with those odds, really and truly. It's not enough data, but for the data that we have collected, I'm happy with what I'm seeing, and I don't mind further later on including or entering in those trades. For retracement, we did get retracement. That means allowed us to catch the continuation, which I'm watching this model right here using first percentage fair value gap. Also another opportunity here. Came back down, displays back up, market structure shift here. Okay, so paying attention to it, to that model, because obviously there's not always going to be liquidity, right? But inefficiency, first percent fair value gap, I don't mind you. I use, like I said, I was collecting data on it before, and now I can potentially add it to my arsenal in my setup right now that I got going on, which I like. which I like. We're looking for a low. Not that we'd be interested in entering at this time anyway, but this is, oh, it hasn't been confirmed yet. Once this candle closes, remember it takes 3 candles to confirm a swing low. All right, we have this candle, we have this candle, this current 3rd candle hasn't closed yet, so we haven't confirmed the swing low here. So this is the swing low that I'd be interested in catching a retracement from. Not that we'll be interested in it anyway because it's outside of our trading hours, nor did it start in the macro to then finish outside of the macro, so I'm just paying attention to price action. It will give us the green go ahead for a continuation setup should we get that retracement, right? So even if we're not going to enter the retracement, we still want to pay attention to price action, so we understand for continuation we need to first see the retracement first, right? Now it's confirmed this swing because this candle, right, swing low, it has a higher low to the left and a higher low to the right. So on technicality basis, this confirms a retracement setup to then give us the green light go ahead to enter a continuation setup. But like I said, we don't have time, we don't have anything. Close proximity to our -2. We got about 10 minutes here to see if it gets us there or not. All in all, very happy with price action today, and my read on the price action, my understanding of the candlestick and the breadth of the candlestick right now is leveling up. And I'm very happy and pleased with that. And that comes from tape reading, right? It comes from watching the market, watching the candlesticks print without any attachment, any form of emotion towards the outcome of a certain trade that you're watching, right? It's just, you're just paying attention to the candlesticks and what they're doing and the storyline that is telling you, is it, and if it's in agreement with your narrative, your bias, and what you're anticipating from price action. So despite whatever level you get to in terms of your trading success, right, you always want to be tape reading, right? When the opportunity presents itself, when you've had a good week, all right, in the first 2 days of the week, the rest of the week, nothing wrong with tape reading and just building more confidence, right? This is where the confidence comes in. This is what builds more confidence in following your processes, your procedures, and protocols. We do have a discount array here using AM session opening range buy side. So a market structure shift up here on this swing high, right, with the lower high to the left and the lower high to the right will confirm a continuation setup after seeing a retracement, right? We've got the retracement, gives us the green light go ahead to then anticipate a continuation. So I'll be watching this. These trades are during a time I would not be taking a trade regardless, alright? So I'm just paying attention to the price action, right? So this high also takes a low here, alright, making it a breakout. Magic Magnet doing his time. Drawing the price closer and closer. Alright, I am confirming a continuation setup here. I'd be interested if this was the time, if we had time in place, right? I'd be interested. We haven't got our ding yet, hasn't taken us out yet at -2 yet, still in there. That would be, you'd be getting tagged in this here, continuation. And there it is. Ding, 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 ding. Terminus on that trade. Thank you very much. Thank you very much. Thank you very much for your service, for your dedication, for your hard work. Thank you. We appreciate you. Thank you, Lord Almighty. All right. So that will be us coming out of this continuation setup. That will be terminus for us right there. Solid stuff, solid price action. I'm very impressed with my read on price action today, for real. I really shocked myself. It's like I've been holding the jade, like, squeezing it, like, shut up, old man. When are you gonna start teaching me shit about jade? But the whole time he's been teaching me jade, and I've been holding the jade in my hand this whole bloody time. And now I know jade. Oh, those that know, you know. If you don't know, you don't know. You're not in the clique. Sorry, not sorry. But let's wrap up. Let's wrap up from this brilliant morning session here. Solid stuff. Solid stuff. Yeah, yeah. I don't think we need to break down any trades because we've literally walked through each and every trade that we potentially could have taken today. All right, we had a retracement set up here that now I'm looking at a weary because obviously I'm paying attention to where my next point of continuation setup comes from. So moving forward, right, as we collect more data, these retracement setup I'll have to think twice on them and probably won't be engaging in them regardless of whether it turns into reversal or not. I'm fine missing those. So we had this retracement set up, didn't give us anything, right? Would have come and taken us out for a loss. What it did give us was a green light go ahead for the continue. We had this retracement set up, sorry, I don't know if I said continuation. We had this retracement sale after taking dealing range buy side. We're in a buy program, so we're anticipating buys for the session. We had this retracement sale, which gave us the green light go ahead to then engage in a continuation setup should price present itself, and it did. All right, we had time and everything. It was during the 950 macro. It did complete outside of the macro. For me personally, right now, this is not a trade that I would engage in, but I'm collecting data on being able to have enough confidence to engage in these types of moves. Okay, so far I'm leaning towards obviously engaging in these moves just based on the 4 data that we've collected, but obviously that's not enough data. I'm still collecting more data on it. So we had this continuation set up. Remember, we didn't take the entry on the initial market structure shift because this one candle took this high, and also took this high. So we always want to go with the highest point. We sacrifice the risk, right? We sacrifice the risk to for the opportunity to be involved in the trade, because if you kept your entry at the first market structure shift, right, you would not have been tagged in this trade, all right, and you would have missed out on this move here. If you're okay with it, you're okay with it. If you're not, then obviously you would want an entry at the highest point. But anyway, saw that continuation setup, given us final terminus. It gave us 3 contracts, so -1, -1.5, and -2. Just getting smashed now. We'll be out of that trade, and we're seeing a retracement set up here again, taking swing low below dealing range high. So we'll be watching this going into the lunch session. Not that we'll be trading anyway, but we digress from that. And then we took dealing range buy side. All right, yeah, again we got a retracement set up here that we were watching. Once we got a closure above mean threshold of this order block here, we understood that this trade was no longer on our side. All right, we were offside and it was going to come and take us out. We would have reduced risk, right? And as you can see, it did exactly that. It came to take us out. But what it did do here, right, is give us the green light go ahead to then enter another continuation setup should price present itself. All right, we didn't get my current model that I'm using to get into the market, but this is a model that I'm collecting data on eventually to be able to add it to my arsenal, just like this setup completely outside of the macro, right? Enough data collected, I'll be able to add into my arsenal. All right, and I'll be able to confidently take those trades and feel no type of way because I have the data to back it up. Right now, I don't have the data to back it up, so I won't be a trade I'll be in confidently, right? And I only want to get into trades I feel confident in and understand, the losses are the only thing promised to me, but I'm confident regardless in this trade because I've collected enough data to back it up. So yeah, this obviously wouldn't have been a trade that we would have took, but I was just paying attention to it anyway. And this, we wouldn't have traded it, but it was fun to watch anyway. Took us to -1. We're watching this retracement set up here going into the lunch session, but that was the day today. All right, very, very solid day. Very happy with my performance and how I was able to read the price action. Anyway, let's get into a trade performance review, and then I can talk more about how happy I am and what I did well today because it seems to be that's what I want to talk about. So let's get into our trade performance review. What I did well today, all right, is that I showed up, all right, powerfully at that. I got 1% better, gained the experience and learned lessons that I'll take into my next trading day, next trading session. Decided that, enough was enough for me this week, and that I was going to go into today tape readings, the last session, my last session of the week. I don't really need to be in the market if I don't need to be, right? And I don't mind tape reading because that's how I've seen growth, just watching the price action and just understanding the storyline that is telling me. Yeah, definitely got 1% better today and happy with the price action that we're seeing here. I'm happy and pleased myself for exercising discipline, right? Even though I know I could have entered the market today, I stayed out, all right? And that's that's pure discipline, right? That's discipline in knowing that you can be in the market, but you choose to stay outside. That's you having control over the market and the market not having control over you. Some days it's okay to just be like, you know what, I'm not entering this market, even though my model is there and is presenting itself, and I know the probabilities are in my favor because my model has proven itself consistently, right? I'm not entering the market today. You don't have control over me. I have control over myself, and I have control over you. That's what I just showed today, and I'm very happy and pleased with myself for that. I'm not in a rush, in the eager to pass these accounts, or whatever. It's just I'm taking my sweet time, sticking to my model, my procedures and protocols, and I'm very happy and pleased with my performance today. You're doing that, baby girl. Keep going. Watching this going into lunch, like I said, we're watching this retracement setup going into lunch. Seems to be doing its thing, the thing, but nothing that we would obviously personally engage in due to the time. Without time, price is null and void for us. Where did I fall short today? I think I woke up by a decent hour, right? An hour before I had to be here. Um, Still not at the time I want to be waking up, but for now, I'll accept it and take it just because of the sickness I got going on. Got my morning routine in that I want to be doing in the morning before showing up in the chart. So I got my morning routine in. Chart wise, I showed up, stuck to my procedures and protocols. I really just tape read the market. When you're tape reading the market, it's really hard to fall short on anything because you're not engaging in anything, right? You're just getting better at reading the price action. And that's what tape reading does. It helps you get better at reading the price action. And I've taped read so much, right, that I was able to read and anticipate certain price actions and certain movements and price respect and certain inefficiencies, and it's just I can't wait to watch this back and just watch how I was maneuvering and holding the jade in my hands. um, yeah. So all in all that to say that I don't feel like there's anywhere today that I fell short. Okay, all right, it's okay not to fall short. You don't always have to fall short, right? How I can improve for next day, next trading session is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on. Keep taking small steps in the right direction, all right? Eventually, we'll get to our destination. Also, keep doing what you've proven, all right? What's proven to be working for you, right? Keep analyzing data, and then collecting the data and analyzing the data is what will take your trading to the next level. All right, what will take your understanding of these candlesticks to the next level. So keep doing that. All right, and don't let up. I just last night was putting together a journal on Notion. I'm creating a new journal system, folders and stuff. So we'll be back into journaling by the end of this for next week. All right, we'll have a journal set up, and we'll get back into journaling because that's one thing that I would say I'm falling short on. All right, is like I said, I'm switching journal providers. So while in the midst of switching, I haven't really been journaling my trades. All right, this pretty much is my only journal, but I have two forms of journal: video journal and also a paper journal. And I haven't been upkeeping on that paper journal. So if I had to go back to where I fell short, that's where I'm falling short in my journaling. So we need to fix that. But that will be fixed for this weekend. For next week, we'll be in full active on the journal and maintaining our journaling. Yeah, we already broke down our trades today, so we don't need to do that. I think I did it ahead of time, but it's fine. Um, yeah, solid day for us here. I'm the Trader Capital. Solid day. Won't take nothing away from today. Anyway, before we wrap up, all right, I want to leave you guys with this. All right, there was a time I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. And that's the trap majority of traders are stuck in, right? They're stuck in that loop of losing, making money, but having no real reason or nothing to back it up, saying, oh, I understand why this trade lost, I understand why this trade took a win. They have no system to fall back on, right? That's the difference between guessing and having a real edge in the market. And here's the truth: most traders only focus on entries, but consistency comes from the system behind the entry, which is what I'm trying to walk you guys through. All right, since we've been doing this for this week, it's been consistent, right? I show up, I do the same thing over and over. The price action might be different, but my system, my procedures and protocols, my processes is the same, right? So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created a 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the mindset and money principle needed to get you to the 1%. All right, is we can get you to the 10% here, but in order to get to the 1%, right, you have to be part. You have to know what the 1% do with their money, and that's what that money and mindset principles will give you. The exact, and you also get the exact process to follow on a daily basis. Okay, it will come with elite coaching and mentorship. All right, online program once we get that up and running, once we get our material together, um, private workshop and access to a fund development track. All right, to become a fund manager. I'm the trader capital, or to scale on your own and go on your own and create your own hedge fund. All right, either way, I want to help you. If you're serious about becoming consistent and scaling your trading career, all right, that is your next step. You know, I used to think that the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome, no matter the market condition, no matter how these candlesticks no matter what they're doing, right? No matter the outside influence that do come into our lives, into our trading, right? Because once you have that, right, the results will follow. Once you have a process, you have a system that you're constantly following on a daily basis, right, the results will follow. That's all from us today, folks. All right, I'll see you guys in the next AM session, which will be Monday. All right, kicking off at 9:15. All right, as always, I'm the trader here, signing out. Good luck. Look at that. You can't see it, but the retracement setup is doing its thing. Good luck, good trading. As always, happy bloody hunting. Remember, you only fail when you quit. So what? Don't bloody quit.